Hey, it's Dan. It looks like the real estate market in Portland just can't get any hotter. And then, much like Arizona in the summer, it does. Just a little bit by bit, until we're pretty much in full on burn territory now. If you take a look at the residential real estate market across the Portland region, the median sale price for April of this year hit an even $500,000. What that means is if you're looking to buy a house, townhouse, condo, any type of residential property in the region, there's a 50-50 chance that you're going to have to spend at least $500,000 to get it. Now, if that seems like a lot, well, there's good reason. A year ago, that same median house was $424,000, meaning the median sale price went up $76,000 in 1 year. That's almost 18%, which is crazy and virtually unheard of. And it's not just the year over year that's amazing to look at. Consider this. That median sale price from March to April, just this year, went up 2.5%. Historically, 2.5% is how much you'd expect to go up over the course of almost a year, or maybe a full year in kind of a slower time period, but not month over month. That's $8,000 to $10,000 for that median price. Well, in fact, more than that by the time you're at the numbers we're talking now. Now, all of those, again, were figures for residential real estate on the whole. But let's take a moment to look specifically at the single-family housing market, since that makes up the bulk of the inventory and housing stock in our region. The top and bottom price ranges are shifting, which is going to start at some point having an impact on affordability. Now, we'll go into affordability in another time, but the affordability index measures how much of the median house a median household can afford. And lately, the median household is doing pretty well on the affordability index because interest rates are so low. It's a bit of a misnomer, and we'll go into that another time. But consider this. In the single-family housing market alone, in April of last year, only 3.5% of single-family homes sold for at least $1 million. Now, that might come as a surprise to know it was even that high, because that's 3.5 houses out of 100, which you might not have guessed would be such a high figure. But fast forward 12 months to April of this year, and that figure almost doubled to nearly 7%, meaning about 7 out of 100 single-family houses that sold last month had a 7-figure price tag on them. Now, that's interesting, but it also means that something's going on in the lower price ranges. So if we look at the general market, median price of $500, it's higher for that for single-family houses. But if we use that $500,000 marker as, because that's sort of a good place to measure, in April of last year, 41% of houses sold were under $500,000. This year, though, that number had dropped to just 38%. Now, 3 percentage points might not seem big, but that's still 3 out of 100 that shifted and are no longer available in that price point. And that might mean that's 3 more people who couldn't afford the house they could afford last year just from that barrier alone. But where it gets a little more interesting and a little more unfortunate is what happened as you get lower in the price range. Right now, in the single-family market, there's just not a lot available anymore for under $300,000. Townhouses, maybe. Condos, yes, if you know where to look. But in the single-family housing market, under $300,000 last year, it was already down to 2.7%, meaning just under 3 out of 100. But fast forward to this year, and it's less than 1%, meaning less than 1 out of 100 houses now sells for under $300,000. And while there are a couple of cute ones out there in that market, in the single-family market anymore, with it being less than 1%, it means that house is probably sold to somebody who's going to fix it or tear it down due to the nature of the condition and so forth. So where will this continue and how long will it go? It's tough to say. There's nothing yet jumping out to say this is going to be the thing that stops it. Eventually, of course, prices can't continue to rise because people won't be able to afford the payments. We do see some that find if you bought your house 5 years ago, you've built up equity, and now you can swarm that over, and if it's a lower interest rate, you can move up in price without really moving up in payment. But at a certain point, this will have to slow down. But to keep this thing in mind again, if you or someone you know is thinking about buying a house, especially if you're coming from the rental market, homeowners gained $76,000 in net worth last year just at the median level. That's insane. But it's also one of the advantages of homeownership. And the discrepancy between those who own homes and those who don't is getting bigger in terms of their financial prospects, or at least their wealth on paper. Again, that's a note for another video. But if you have any questions about the market for your home or what's happening in your area, let me know, because of course it's not even across all markets. But I can almost promise you where you are, the trend is similar. Thanks for tuning in. We look forward to talking to you soon.